Hello, everyone. Um, we are going to wait for the request from Martin. Oh, here we are. Looks like he is popping up any second now. Hi.
Hey,
Hey, hey. How are you?
I'm doing well. The sun is shining in Chicago, and this time of year, that is amazing. That's all you need.
Rare indeed. I took Bash out for a really long walk earlier, so we had a good time enjoying it as well.
Nice, good.
Well, thank you for joining us. I want to start by telling everyone first thing, there's probably going to be some spam and some bots and some whatever because Instagram just has a problem with that right now. We're going to ignore that. We're going to stay focused on the conversation. We're not even going to worry about it. The other part is Martin is going to be sharing with us a lot of things that I think many of us either don't know or have desperately been wanting to get the answers to. So I encourage everyone to sort of listen a little more than we ask questions and type away because you may miss something. This is going to be recorded and saved in our lives so you can go back. If there's a question you have that's just burning through your fingertips and you cannot control yourself, I would suggest putting it in the question box because I'm probably not going to be manning the questions that closely. But other than that, that's kind of like house rules, first order of business. Again, Martin, thank you for doing this. I know this time of year with tax preparation coming up, it is crazy busy for you. So I appreciate you doing this. And I guess we can start there. You can just tell us a little bit about yourself, what you do, how long you've been doing it, all about Revel.
Sure. Yeah, I love it. And thank you for setting this up and for sharing this kind of stuff with your community. I think, we saw in response to the post you shared last week just how many folks have questions about finance, about taxes, about their businesses.
Right.
So a lot of these things that are on people's minds, we know are going to show up for other folks as well. So it's so valuable for you just to share this kind of stuff with your community. Um, so thank you.
Of
Um,
course.
you know, we at Revel do accounting, tax work, consulting for business owners, primarily in creative and entertainment industries. And that little niche of ours has been my spot that I've been operating in for most of the last 15 years. And if we want to, we can get into how and why that happened. But I'm a CPA by trade. Revel is my practice. My firm is the second accounting firm that I've owned and started, actually. And we're based in Chicago, though we serve clients. We work with folks, coast to coast all across the country. So, yeah, and it's good to see some of you here. I see some smiles and waves from people in our family that are showing up for this. So thanks for joining.
Yeah, so I'd love to know more about like why you chose creative specifically. Something that I was thinking about is I really love you guys' handle that says, accounting wasn't created with you in mind, but we were. And that's something that I really came to understand when I was in law school is that these traditional professions like the legal profession, accounting, they don't really take creatives into mind. And a lot of times, if you are a creative trying to fit into that world, it can feel like trying to fit a square peg in a round hole. And you just don't, you realize that none of this was set up with what you do in mind. But if you're someone who is a creative and you want to, legit or really solidify your business, it helps to have someone like you who kind of understands what we do. So I'd love to know why you chose creatives and if you only service creatives.
Yeah. Okay. Yeah, that's a great question. So there's a few parts to that. The first being how did I get here? Why this? Where did it come from? And uh, if you go all the way back to high school, even I was just as interested in my economics classes as I was in doing theater stuff after school and on the weekends. When I applied to colleges, actually, I applied to half of the schools into their business school, and the other half of them I applied to go into their theater programs. And so I was always kind of riding this edge between money, business, and creative stuff. And when I finally got out and started going through school and got into the professional world, my idea was this was always going to be two very separate things. That I was going to have my career in Big Four public accounting, make a bunch of money, and then I could go be a creative artist and like live my quasi bohemian life, but with a little nest egg saved up. Right? That was like all the wisdom that I had in my 20s. At that point, I was like, never will these two things touch. I want nothing to do with the theatrics of the business world, and I want nothing to do with the money side of making art. That's the part that, ruins it. I had all these thoughts. And of course, I've spent my whole life exactly at the intersection of those two things, So creatives have been my circle. It's the group I run with. And even though professionally I work now as a CPA, I've run theater companies before. I've been on boards of directors of arts organizations. So that part of my life is also still very alive. Yeah.
I did not know that about you. I thought you just thought creators were cool and wanted to work with us. I didn't know you were one of us yourself. I like that.
I'm a wannabe designer. I'm a wannabe musician, a lot of things, right? But like, I think ultimately it comes down to how you see things, right? Like how you see the world. And like you were saying, how to try to navigate these systems and structures which were, not created with creative folks in mind. They were meant to be navigated by people who went to business school or got this license or this degree. And look, that holds a lot of people back. It holds a lot of creative folks back. I remember early in my practice just being overwhelmed, looking at all these folks who I knew, maybe I knew personally even, paying way more in taxes even. Just like, let's take a little basic example. Paying more in taxes than they need to just because they don't know the opportunities that are out there for them to write this thing off, or they feel guilty writing something off that other people can't, even though it's really connected to what they do. And at the end of the day, what does that mean, right? If you're not taking advantage of these deductions, it means you pay more in taxes than you should. And then that means that these artists have less money in their pocket at the end of the day. And what a crime that is, the
whole starving artist why no one wants to be a creative, because they think that you're going to be dead broke if you do. And I definitely identify with what you're saying about it just being really hard to commit to being a creative. And I know when I was in law school, my first semester, I honestly almost dropped out because the creative in me felt so stifled. I always explain it like if I were a candle, law school kind of felt like someone snuffing me out. And finding the IP track is what kept me from dropping out of law school, because again, that environment is not created with creatives in mind. It's to teach you to be a soldier, right? To think a certain way, to walk a certain way, to dress a certain way. And if you're not someone who thrives in that environment, it can feel very demoralizing. And so I really had to find my own sort of path within law school, or else I would not have been able to tough that out at all.
I hear you. I almost went to law school. I almost did too. And then I met some lawyers.
Yeah.
And I was like, I don't know, because you know what, it felt like you kind of have to rewire yourself to always be looking for the worst possible outcome, right? Like that's your job. You kind of like have to sniff out what are all of the risks, the liabilities, the exposure. And I just thought, man, what a difficult way to move through the world.
Right? It's why lawyers have the highest divorce rate, why we have the highest drug use rate, why we I mean, we could go down that route all day, but it is a very depressing way to live for sure.
Yeah.
So tell us about your business and your business model. I had a lot of people asking, like, can they hire you for one-offs, or do you only work in retainers? Is there a flat fee? Do you charge hourly? A lot of people wanted to know that.
Yeah. Yeah. And I'll speak first just about how we do things at Revel, and maybe at some point we might have some time to talk just about like the industry in general, so you know what else is out there too, because there's definitely folks doing things in different ways. We found a way that I think works best for us and gives a lot of upfront transparency, because one of my things is like I don't want clients getting surprised later down the road and working with us that all of a sudden now there's this extra cost or that extra thing. So we work with folks usually in one of a few different ways depending on where you are in your growth, right? So for clients that are just starting out in their growth and development, say like 0 to 100K, somewhere in that range, for folks in that range, we will focus our effort together on tax prep and like centering the relationship around that part of the engagement, because that's where we can provide the most value at that stage without being overly financially burdensome, right? We know where we want to live in terms of your overall pie as a business owner, and what we do should really not be more than 2 to 4% of that pie, right? So we try to focus our work in a way that we can add the most value there. So tax work, and we do that as one-offs for sure for people, whether it's just individual return with a Schedule C, or if you have a corporation partnership that needs business stuff done, we can do that too as one-offs. Then when you get into 100 to 300 range, now we will still do the tax prep, but we'll also most likely be starting to do some planning work with you, because it becomes so important as you start to scale, right, that you're keeping your sights set on the taxes that are going to be coming down the road, right, while you're making more money now, right? So we have some mid-year planning meetings, that kind of stuff with folks to make sure that we're keeping an eye on that, so that there, again, aren't surprises later. And then for clients that are 300K or up from there, we can become the full-on outsourced financial function. It can be anything from bookkeeping to payroll, reporting, still taxes, tax planning, that kind of stuff, but even cash flow forecasting. Really, we do everything an accounting firm does short of audit work. But so our goal is to kind of grow with you and kind of scale up, meet the needs of the business where you're at, and grow accordingly.
So, okay, I'm glad that you mentioned the sort of the money benchmarks, because that was also a lot of people's questions is there a certain amount of money someone should be making before they hire a CPA? And if so, what is that? Or is it based more on like what your goals are and where you are growth wise?
Yeah. So I don't want to speak for everybody's circumstance, because there are accountants and CPAs out there at every point in their career, at every price point, and when and whether they can add value, right? Those are good conversations to be having with somebody you're interested in working with. Like, how do you see you adding value to me, to my business? I always tell folks, like, you can buy a car for literally any amount of dollars. If you want to spend $500, you can. You want to spend $500,000, you can. So you can find somebody out there at any point. But the way we think about it and talk to our clients about it is, we like to think about where you're at in your growth, how we can right size and fit that in with the services we're going to provide. And it's a kind of personal conversation, right? So I know, for example, we don't work very often with people who aren't business owners. If all you have at the end of the day is a W-2 or even, a couple W-2s, we can't do much more for you than you could do for yourself, or even in getting the help from the tax shop down the street. Where we know we add a lot of value is in working with business owners, in particular creative business owners. And so that's who we usually focus in on. You'd asked earlier too about um, whether that's all we do is creative folks. And for the most part, yes, though, like over the years, there's a lot of different things that have kind of become part of that definition of creative.
Right.
Um, and so, we work with graphic designers, branding and marketing agencies, photographers, film production companies, uh, authors, software development people, anybody who I would say kind of thinks more on one side of the brain than the other. You're probably going to get some benefit out of having us help translate the world of business and taxes for you. Um, and, some of those folks have partners in life. And those partners may not be creative. I don't know. I always think it's interesting to see like how people couple up, and
Mm.
it's almost like sometimes you get a creative pair, but not always, right? Sometimes like the creative person needs that other person to balance them out. And so we have clients also that may be connected to a creative business owner. But yeah.
Yeah, I kind of think about it when it comes, like, I think about it the same way people sort of frame the conversation in influencer content creator world around, like, when do you need a manager, right? And I always say, I'm sure there are agencies that have a hard line of you need to be making this many dollars before we will sign you. But what it really boils down to is this person has a fee, right?
Yeah.
Whether it's a flat fee or a commission, and is hiring this person gonna cut more into what you're making than it's worth, right? If you're at a stage in your career where you're losing opportunities because you can't manage them all, and the money that you're using, you probably could have used that to hire a manager and take in more opportunities, then maybe it's worth it. And so I kind of think of a CPA in the same way. It's like, if I'm going to pay an extra $20,000 in taxes this year because I don't know what I'm doing, it maybe would have made more sense to give that 20 grand to a CPA who's going to make sure that not only do I know what I'm doing, but that I am best positioned to grow in the future. So I don't know if that answers the question of like, where is the number, where's the line? But I think to your point, it's a personal assessment, and you kind of got to weigh what your options and what your pros and cons are, what you're giving up and what you could be potentially gaining.
Yeah.
And that was sort of the place that I was in when I reached out to you, where I was like, I am about to blow so much money in taxes. So
Yeah.
someone help me. And it just made more sense to have someone like you help me with that.
Yeah.
So hopefully that answer. I got a lot of questions about, like, well, when do I need a CPA? How much money should I be making? And I think based off of your answer, it's a
Yeah.
personal decision that you kind of have to just seesaw out the options, right?
That's right. You want to have conversations with people, and I don't know if you see ever shows on HGTV, that kind of like home shows, and you'll have some of those shows based in LA, and they talk about the homes that people are looking at buying, and they have another show based in Mississippi, and you've got homes that people are buying for $50,000, and so depending where you are, that's another factor that's going to impact price, and also like the levels that it makes sense to work with folks. The numbers I shared earlier make sense for us and for our clients. Um, but if you are a business owner, I would say more often than not, you're going to find like you said, is there a return of value to me? If I'm going to invest this money in working with the CPA, am I going to get at least that much back in value? And for most business owners, that's going to be the case. Somehow you're going to find somebody that's a good fit.
So I also got a lot of questions about like credit and credit repair, and should I pay off my student loans or should I put that money in something else? And I started to realize that there may be some confusion about the difference between a CPA and, say, like a financial advisor.
Yeah.
So what is the difference between what you do and someone who's a financial advisor, or even someone who works in credit repair? Because I don't think that they are the same thing, but unfortunately, I think people kind of are blending them together.
Yeah. Yeah. I mean, that whole financial world, right? There are blurry lines for sure. Uh, but just to kind of tease apart a little bit, what does a CPA do? How's that different than a financial planner, than an investment advisor, right? Just to think of a few different things. Uh, so folks that get, well, first of all, CPA license is a license that you have to apply for after getting a degree. It has requirements about tests that you have to pass, number of hours you have to have been working. It has ongoing continuing education requirements. So it's a professional license to become a public accountant. And the kind of work that that translates into is usually in businesses. It's about bookkeeping, taxes, audit work. In the personal realm, mostly CPAs are engaged around taxes and tax planning. That's the biggest area. Uh, and then CPAs work in nonprofit world also, doing, again, audit work, tax for those nonprofits. When you look at financial planners, right now, a financial planner, those folks are designed to help you navigate questions about big life changes, like we're about to get married. How do we think about combining finances? Or we just had a kid, right? Like, you know, what are all of the many things I need to plan for in having a child? Or retirement, right? Like looking at, here's my savings, my little nest egg right now. Let's look forward a bunch of years. Do I have enough? Is this going to cover me? Do I need to make changes in my spending or saving habits so that I'm try to have a better chance at having something left down the road? And there's a similar sort of professional designation for financial planners. Not all of them have it, but you can become certified just like CPAs do, right? So CPA, certified accountant. You can also become a CFP, certified financial planner, right? And some people actually do both. But so the financial planners, that's the questions they deal with. And then you've also got investment advisors, and those are people who actually help you pick stocks to invest in, or help you rebalance your portfolio, give you guidance about that kind of stuff, and sometimes even just full on manage your investments for you. And the credit repair question, I'm just seeing personally a lot more folks specialize in this area. It's a huge area of need, and I can only imagine with the number of people that are 6 months plus behind on rent or mortgage payments these days, which is a staggering number from what I just heard on the radio the other day. With as many people as are facing credit issues now, I can only imagine it keeps growing. But so there's people who specialize just in credit repair, but a good financial planner should also be able to help you navigate that, because it falls in the realm of that like personal financial world.
Right. Yeah, I always try to stay away, at least in both my private and online life. I try to stay away from conversations about credit repair, because I know people have so many different approaches to what they think works. I personally have just taken the approach when it comes to credit repair that you don't screw your credit up overnight usually, and you can't fix it overnight usually, right? What credit is supposed to be an indication of, we can have a conversation about whether we believe that system is, a good one, but what it's supposed to be is an indication of your long-term financial responsibility, or your ongoing financial responsibility and your habits. So what that means is you are going to have to demonstrate over a period of time how you have fixed those habits. And that may not mean being able to get something fixed overnight. It just might mean you got to kind of sit where you are and just start demonstrating the new habits, right? But that's just my approach. It's like, I messed up. Let's fix that now. And I kind of say, like, today's my new start date. We're going to move forward with demonstrating better habits. And 2 years from now, 3 years from now, my credit is certainly going to look different than it did when I started this process. But again, I try to stay away from those conversations because I am not a professional, and that just is the approach I took with my credit. But I was also in a place where I could afford to kind of take a little time to get it together.
I really appreciate something you shared there, which is, you know, it's not even just trying to say that, like, if it sounds too good to be true, it probably is. There's some of that out there for sure. But what I really loved about what you said was, even let's even imagine you do find something that just magically turns around your credit overnight. You could pay somebody $1,000 and then all of a sudden your credit score is going to bump up, right? Have you actually addressed the underlying
the first place, right?
Exactly, because like you're gonna go put it back in the trash in another 3 months.
Right. It's like getting lipo and then not changing your eating habits if that's something that, if that was your reason for doing it, is right. It's like at the end of the day, you're going to be back where you started if you don't fix what got you there in the first place. Now, again, there's a conversation about, did I just not have enough money? And that's a real thing, right? Yep. But having more money and not knowing how to manage more money puts you back where you were. And so, yeah, whole separate conversation about credit repair. Again, I just wanted to put that out there and have you explain what the differences were, because there were a lot of questions about, like, how do I improve my credit? How do I get my score up? What do I do? And unfortunately, again, I think the answer to credit repair is time and good habits. And a lot of people don't want to hear that, but that's the solution, unfortunately.
Yep, that's right.
The other thing a lot of people want to know is, like, how do you find a good CPA, and what are some of the questions you should be asking them?
Yeah, that's a great question, and we actually have a resource, a guide that we put together around this that we've been sharing with folks for a couple of years now. If you are interested in a copy of that, if you just shoot a quick email to hello@Revel CPA, REVEL CPA.com, hello@revelcpa.com, we'll send you that PDF. It's got a checklist that you can be thinking about, and also some questions to ask somebody that you're interested in working with. But just to give you a few right now, I think personally, and maybe this is my bias from working with creative folks, having somebody that understands your industry feels really important to me, right? Because I hear all the time from clients who have worked with other accountants, just like generalist CPAs, who were told the wrong thing, who were told that, that they can't write off the tickets to the movies that they go see, even though they're a filmmaker. And watching what is happening in society and in filmmaking is literally a part of how you have to internalize that and make your art. So having somebody that gets your business, your industry, is really important. And a good place to look for recommendations with that is honestly just to tap your network and put a feeler out to the people who who you trust, who maybe have businesses like yours, or like you kind of aspire for yours to be. Right. Because then you're going to be tapping into the kind of people that work with them and their businesses. So referrals are really helpful. Looking for industry expertise is really helpful. And then, in general, I like, obviously because we've set up our structure this way, but I like transparency and I like fixed costs. so that they're easier for clients to plan for and budget for. Um, I don't really believe in the hourly business model, though there are accountants out there that still operate that way. To
Mhm.
me, just kind of it incentivizes all the wrong things, right? Like it incentivizes you to be slow,
Mm-hmm.
and nobody wants that. Like I don't want to do that. The client doesn't want that. And then it's also it just leaves everything open ended, where like you have no idea what your invoices are going to look like each month, and that's aggravating and anxiety producing. And why? So, but look, if that's your jam, cool. Just knowing how people charge for things and making sure you work with an accountant that does things the way that works for you is important too.
Okay. I mean, I love that you have a resource for that. So that's an easy, surefire answer for everybody. So
Totally.
let's get into what like people really came here for. One of the questions I got, and we kind of tapped into this just now, about write-offs.
Yeah.
What are the things that I know they will differ for each? Like you said, for a filmmaker, you might be able to write off your movie tickets. That's probably not something I can do. But um, I always wonder, I'm like, can I write off my haircuts?
Mm.
You
Mm.
know, like things like I'm like I have to be camera ready, right? So I don't know. Just tell us about, as a creative or as a business owner, what sort of categories of things should we be looking for write-offs?
Yeah. Yeah. Okay. A lot of different angles we can come at this one, but the first thing that popped in my head was like thinking, can I write off my haircuts? I gotta be camera ready. I don't know. Do you think I can? Do I have to be camera ready? I'm on the camera with you right now. I don't, right? Okay, and that is exactly why probably
The
the
lawyer
answer.
in me, the first thing they teach you in law school is that the answer to every question is it depends.
That's right.
So my answer to that is it depends.
Yeah, yeah. Okay, so what you're keying into is that context is everything, right? And that's why when I do keynotes or workshops or present on this kind of stuff, whenever we talk about writing things off, I always say like, look, there are books out there that claim to be like business deductions A to Z, right? And they claim to have every possible thing listed in there that you can write off. And the reality is there is no such thing. There's no such thing as like an all exhaustive list of all of the things that can be written off, because an, what is deductible, it's an idea, it's conceptual, and so you need to know how to think about it and apply it. And so I've tried to create over the years something we call the golden rule of writing things off, which I ask clients to internalize this and remember this question. If you ask yourself when you're about to spend some money, did I have to spend the money that I'm spending in order to make the money that I make doing what I do?
Hmm.
Did I have to spend that money I just spent in order to make the money that I make doing what I do? If the answer to that question is yes, then most likely, unless it's somehow otherwise prohibited, most likely that's going to be deduction. Uh,
I
and
like that answer so much.
yeah,
Oh, you just awakened a beast in me. I like it a lot.
right. And there's a little bit of balance to that. If that gets your mind racing and gets you excited thinking about like all of the things that could fall under that category, yes, that's where we want you to be. And then also recognize that in exchange for being able to write off things that maybe a lot of folks out there can't, because you do get to write off your movie tickets but other people can't, or you do get to write off the concerts you go to or the art you consume, the museums you visit, whatever it is. In exchange for being able to do that, you will then take on the work of documenting and understanding why. What's the connection, right? So um, if you went to the museum and you want to write that off, maybe you jot a note on that receipt about what this made you think about, or how it's connected to this thing that you're researching currently. You know, this is research for this next book that I'm writing, or this presentation that I'm working on. So there's a little bit of responsibility that goes with the privilege of getting access to these deductions, but we want you living in the world of having an open mind and open eyes, looking at the world, thinking about what are the things that I can consider part of the cost of me being in the profession I'm in.
So did I have to spend this money to make money?
That's right.
That is the question.
Right.
Like a lot, because in my mind, the answer to my whole life, everything I've ever bought, the answer is yes. Everything. I'm like, did I have to pay for this paint to make money? Yes, I did. So you may have to reel me in on that one, but from now on, my answer to that question is forever yes.
Yeah. Okay. Yeah. I can feel the challenge now.
Yeah.
And
That just
opportunity.
a whole new world for me, and I'm loving it. I'm very excited about that question.
So it's always better for a client to be leaning in that direction, like leaning toward your direction, than the other way, because like you said, you're saying like, reel me in. That's exactly what we want. We want you to bring everything to the table so that we can then say, okay, yes, 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 but not that, right? Whereas if I have a client who is more shy about bringing possibilities to the table, like there may be things out there that we never knew were a possibility, that they just kind of self-edited off the table, and that's a lost opportunity. But you know, there are some things where we have to apply thinking, that some critical thinking to it. For example, I had a client just recently asking about things like clothing, right? Like wardrobe, clothing, that kind of stuff, right? If I buy a new outfit to look fly for this shoot, is that is that going to be okay? Okay, here's how there's sort of two ways the IRS thinks about this. Number one, there is work-related clothing that people buy that there is no place for in your normal day-to-day wardrobe. Okay?
So
If I'm a painter, for example, right, and I have to buy those things to like zip up to cover myself so that when I get all the paint on me that it doesn't go on my clothes, then that you're not wearing that out also on Saturday night. So you're buying those things, that's fully deductible. It's easily understandable that that is all business and has no life in your personal wardrobe. If I buy something for a photo shoot, or a video recording, something like that I'm doing, and then as soon as I'm done with that use and that purpose, it just goes into my normal rotation and becomes a part of what I'm wearing week in, week out. That thing, that cost that you had, yes, it maybe had like a marginal impact, a tangential effect on your business, but really it's spending most of its life in your personal wardrobe.
So what I hear you saying is buy things and wear them once.
If you notice how the people who, like the biggest celebrities and people who make the most money do it, you'll see that pattern, and that's not accidental. Yeah.
I told you, you just created a monster in me. Oh.
Now listen, Blake, if you're going to be buying all this stuff for one-time use, we're also going to be having a conversation at some point about how that's impacting your profitability.
Right.
And trying to keep your goals in mind and keep the right level in your bank account. So it's all about balance. But yeah.
Fair. Okay. I hear you. But this is the geek in me that is very excited right now, because I'm like, that just made so much sense. You made a very abstract concept and something that I think a lot of people feel like doesn't have any rules. You just created structure around it, at least for me, and that's where I operate, in structure. So I like that a lot.
Yeah. Yeah, I mean the words that exist in the tax code around deductions in the kind of like beginning paragraph of how they lay it all out is they say that they're trying to capture things that are ordinary and necessary in the course of business.
Mm,
And that course of business looks different for different folks. And so part of what's important is when you are, out and about in the world and you hear people saying like, it's okay to write this off, or my accountant said I can't write that off, right? You have to always remember, well, that's what was true for that person. That's the advice that that person got for their situation. That may not apply to me because, we're all different thumbprints out here, perfectly unique with our own circumstances, and we need our own judgment about whether something applies or doesn't. So be careful what you're listening to out there, and make sure that you are thinking about it specifically with how it pertains to you and your business.
gotcha. So I'm trying to figure out which question do I want to go with first. We're talking about taxes and write-offs and things like that. I had a lot of questions also about if you're filing your own taxes, do you recommend software or websites like TurboTax, for example? Like, what if someone is not at a place where they feel either ready or financially able to hire a CPA and they do their taxes themselves? What's your thoughts on TurboTax?
Sure, sure. It's tricky because, okay, I mean, I got out of college and I was an accountant, so I've never used.
Mm,
So I don't have so much of an opinion, especially about like one versus the other, but I can give a comment about the software options in general versus, like H&R Block has, I think, software that you can use online. They also have offices that you could go in and meet with somebody, and it's going to be more reasonably priced than sitting down with a CPA to do your taxes, because not everybody in that office is a CPA. But what is tricky about software is it's going to ask you to answer questions that you may not really understand what is being asked of you.
right.
In exchange, you might give it the wrong answer. I've had many clients who've come over the years that, we always ask for a copy of their last tax return that they filed. We do that for a couple of reasons. One big one is we always want to look to see if there's anything there that rolls forward into the next year so we don't miss it. But another reason is also just to give it a quick look and make sure that it was done well, bring up any issues if there are, if we need to fix something. And we often see clients, double report income, for example, or mislabel, their rent income as their rent expense because they were just answering a question as best they thought they could in the moment. But ultimately it winds up giving them the wrong result, and unfortunately sometimes paying more money than they need to. So I guess I'm just saying, when you have a human that could kind of help navigate those questions and make sure that you're being asked the right questions in the right way, hopefully, uh, I always feel like it's gonna pay for itself, probably, unless you have, honestly, the simplest of simple situations. If
Yeah.
it's just a W-2, or even like one W-2 and maybe some interest come from the bank, that kind of thing, absolutely, you can get away with a, a piece of, like, do TurboTax, do some software. DIY approach can work there.
Right. Yeah. I mean, I can use myself as a personal example of that. I mean, we're kind of dealing with it now, right? Where, like you mentioned, the software, if you don't know exactly what it's asking you, you can answer that question wrong and the implications of that are far greater than you thought they would be. And so you mentioned overpaying, but then there's also the possibility of underpaying for taxes, which is what happened to me, right? And then you get a bill where you're like, hey, by the way, you still owe us another couple of $1,000s. And it's great if you're in a position where you can pay that and you can just, fine, my bad. But if you didn't plan for that, or you genuinely thought like, great, this is all I owed, and I pumped the rest of my profit back into my business, and now you've got a bill from the IRS saying, hey, you owe us 10 grand, you owe us $15,000, and you don't have it because you didn't plan to spend it in that way. So that was another reason why I this year for taxes was like, look, I'm gonna leave this to somebody who knows how to answer the questions right, because I don't need these people mailing me nothing else. Like, absolutely nothing else. Take your money, go, leave me alone. But don't mail me nothing else. So I appreciate what you're saying.
Yeah. I want to just say something quick about that, because the anxiety that folks experience at getting mail from the IRS, that's a real thing. That's
yes.
And it can lead to folks often, putting it in that pile over there, like, which is where I just have all those unopened letters from the, like, I don't want to think about them. And maybe if they all just live in a pile over there, then, I could just go about my business and it'll be fine. And I just want to throw out some words of caution and hopefully guidance, that's just the worst possible approach you can take to dealing with it. And I get that there's a lot of reasons why, and people have very personal experiences and everything that go into that. But the IRS is nastiest.
Our dog is very upset right now, so sorry.
Oh, that is?
Yes, it's bad. He hates the neighbor's dog. He hears her. He's on alert. So sorry.
Oh man. No, well, you gotta be. He's gotta hold down the homestead. So yeah, so the the last thing you want to do is just go quiet and disappear on the IRS, because that's when they get angry. That's when they start ratcheting up the tone in the letters, because they think that you're gone. They think you're blowing it off. They think you've disappeared to Mexico and they're never going to get their money back. They don't know. They don't know what to think because you're not communicating. And the best thing to do, the easiest thing to do, and what does work, is to call the number on the letter and just say, hey, got your notice. Hey, look, I got nothing for you right now. Like, there's no money, but I want you to know I got it, and I'm going to check back in with you in 3 months and see if I can't make a payment toward this. Right? They will work with you if you communicate, and it becomes hardest to work with them if you don't. So I want to appreciate and recognize the stress that can be there with dealing with the government, in particular with the IRS, but just caution that if you can find a way to do it, look, have your friend come over and have them open the letter and call up on your behalf, right? So you don't have to touch it, you don't have to look at it, and then they get on the line, just tell them what's going on. You'll be so much better off for it, So it's just something to think about.
Yeah, the anxiety is definitely real. And I kind of took the opposite approach where, they send it to you and they tell you can appeal it, you can, do all of that. And I was like, I actually don't care at all. However much you say you want, you can have it. Just please leave me alone. Like, I immediately went into like fetal position and was like, take whatever you want. I don't want to talk about it. I'm not appealing nothing. And did end up, someone mentioned like the call times about, when you call them, it is a very long wait time. I waited on the phone for 2 hours.
Yeah.
But that 2 hours was worth it in order to not have to deal with this no more. So it's a trade-off, and again, very stressful and anxiety producing. So I can understand why some people, or at least someone like me, would shy away from doing your taxes yourself, because you get one of those letters in the mail, it's enough to make you drink. And
I get it, but also, like, look, they mess up. They do. They mess up, and when I hear like I got the notice, so I paid it, it just makes me think. I remember I got interviewed years ago because a client of mine brought their mom or grandma's, somebody in their family got a notice. This woman was in her 70s, and she got a letter from the Illinois Department of Revenue saying that she owed them, I don't know, 370 some dollars.
Oh, okay. I thought you
from
were about 1,000.
from years ago, right? From like 20 some years ago. And the whole thing was a computer mistake. It was a glitch. But like, I feel for those people who are getting notices. They don't understand what they're about. They just think like, okay, I guess I'll just pay it to make it go away. Um, but it can help to have somebody you trust take a look at it first, just because, not every notice that shows up in your mailbox is valid, is accurate. And a little PSA for right now, for this year in particular, the IRS got to a point last year where they had documented millions of pieces of mail unopened. They had whole parking lots, and the parking lot was full of trucks parked end to end, nose to butt, and every truck was full of mail, right? So these are like, in a parking lot surrounded by barbed wire. So all of your letters, your correspondence, the payments that you sent in by check, if you weren't making payments online, like all of those things are sitting there unopened, and the IRS is writing letters in the meantime saying, hey, you owe us X dollars, right? Meanwhile, you sent that back in July. It's just been sitting there. So it's especially important these days because there's been so much crossed mail going along, that you really have to check and make sure that before you go pay something, make sure it doesn't, you didn't already take care of it.
And this is why you're the professional, because I'm at a place in my life, and we talked about this, and maybe this will be our next question, where I came from a background where money was a very scary topic, and it was scary because we didn't have any, right? So with bill collectors calling and landlords looking for money, you learn to avoid money and talking about it, and because you never have it to give, right? And so after climbing out of that hole and being in a much better place financially, I have a really real fear of going back to that.
Yeah.
And so anything that pops up in my life financially that has the potential to be negative and like put me at a deficit money wise, I try to make that thing go away as quickly as I possibly can. I'll give an example of this. Like, I'm doing a partnership with a brand, and it required for me to go get like some medical testing, and they were supposed to pay for that. For whatever reason, wires got crossed, the bill got sent to me. I immediately freaked out. I was like, I'll write these people a check today if that's what I have to do, because the last thing I want is for this to go to collections and it become a me problem. When I got done digging myself out of a credit repair hole, I'm not trying to go back in there. And the brand is telling me like, no, it's fine. We got it. We'll take care of it. And then, a month later, I get another bill. I'm like, listen, people, if y'all want me to pay this, just say the word, because I'm not going to collections over this. And again, they're totally calm. They're like, no, it's fine. We got it. It's not a big deal. I'm like, it's not a big deal to you. I can't live like that. So all of that to say, it did get taken care of. But in the meantime, it was causing me a lot of anxiety because I just can't exist in that space right now. So a lot of people wanted to know if you've always had a healthy relationship with money, and if not, how did you get yourself to a place where you do?
Yeah.
If you do.
Right. Do I still? I mean, the circumstances you're talking about are very real for a lot of folks, and I think in particular, uh, anytime you talk about financial circumstances in this country, the big elephant in the room is the institutional racism, the structural oppression that was at the heart of so many things, whether it's housing, whether it's how much you're paying for your rent, whether it's how you deal with medical bills, insurance, like all of these things, they're all connected, right? Because it's all part of somebody, generational wealth transfer, all of those things. So we all have personal relationships to money. They're going to be impacted by things like your racial background. They're going to be impacted by things like your family history. I was an immigrant to the country when I was young. My father, his family was from here before, but my mother and her family weren't. We came over when I was fairly young, but like definitely still had that relationship to money that was impacted by how like everybody around me had all kinds of things that I didn't have. I remember telling myself, promising myself as a kid that I wasn't gonna have that same experience when I grew up. I was gonna create a different reality for myself. And did I always have a healthy relationship to that? No, hell no. I mean, as soon as I started having money, it was gone, right? I wasn't used to having it, so also I just spent my way back to where I was, right? And I think that's also a thing people talk about is like we kind of have this homostasis point, like this comfortable break-even point financially where we are, and often even when we get a big windfall, we'll spend our way right back to that number, to that amount, because that's what we're used to. And it takes a real mind shift to let yourself grow and expand financially and expand your relationship. So I, I know that I haven't had a good relationship to money in the past. I feel like it's getting better. Um, and I know that it's going to keep evolving. You know, my wife and I recently just started working with a financial planner, somebody who focuses on that side of things, because we want that structure and we want that guidance. Like just in the way that you want to lean into me for guidance and advice on the business side, I want to lean into somebody to help us think about budgeting, retirement, all that kind of stuff.
Yeah, I think I've taken the opposite approach, which is that I feel held hostage to my money. Um,
Mm.
and there are a couple of my friends in here and they can attest to this, but I'm like, I hold on to my money with like closed fists. So we can be out somewhere or I might come across something that I like online and say it costs $80. And they're like, Blake, it's $80. Like it's not a big deal. I'm like, $80? Who finna spend $80 on that? Not me. And so and it's not that I don't have the $80, but I feel held hostage to it. Anytime like I set an arbitrary number in my mind for my bank account, and anytime it gets remotely close to that, I panic. And to be fair and to be completely transparent, like that number is, you know, it's more than probably most people make in a year. And I'm very fortunate in that. And I try to balance the anxiety I feel around my money with the reality that like I'm doing okay.
Yeah.
But
Yeah.
it doesn't change the fact that I feel very, very anxious about it. And like, I mean, to the point of losing sleep at night and waking up being like, what am I going to do? Um, and so I really wanted to get out of the place where I feel so traumatized by my money at all time. And I don't know. That's something that I personally very much struggle with and am trying to get better about. But I literally don't spend money because it causes me like trauma when I do.
Yeah. I'm curious, has that changed at all for you becoming a business owner?
Um, no, I think it honestly. changed for me because I wasn't always like this. Before, when I was struggling with money, I obviously didn't have a fear of spending money because there was none to spend. But it wasn't until I started to make and have money that it became this dichotomy between, okay, like you're good now, but one false move or one wrong purchase or one purchase that's too large and you're going to be back where you started. So to avoid that, just don't spend the money, sis. Let it sit there. Let it do what it does. And then when I hire people like you and people and professionals say, why is that much money just sitting in your bank account? Like, why are you not making it work for you or blah, blah, blah? And it's because I'm terrified to touch it or move it or spend it or even look at it too hard because I have this immense fear of it not being there. And I know that in order to continue growing in the way that I want to, I have to get out of that. It just is, at least for me, much easier said than done. But that's my own, like, just talking about it, I'm like, I don't want to, it just freaks me out.
Yeah, it's not, you're not alone. You can see it in the comments, and I know too, just from working with clients, that's real, and it is hard to make that pivot. And some folks honestly don't. Like, some folks just, that's going to be the way they relate to money ongoing. The thing that I've seen have the most impact on it, which is why I asked the question about being a business owner, is like, there can be, I should say, not always, but there can be a pivot on this when somebody starts having the experience that they can affect their own financial future through their own work and efforts, right, as a business owner, versus I'm relying on you, person, to send me my paycheck each week. No, Blake is making their own paycheck every day. You go hustle right? So like, when
so you saying that does strike a chord, because there are moments when I do have to spend money where I can calm myself down by saying, it's fine. You know how to make it back. It's fine. So I can talk myself off a ledge in those moments, but
the ledge is there.
The ledge is always there, and I'm always just dangling over the edge of it at all times.
Yeah. I get it. That's real talk. Yeah.
Okay, so last, I guess, 2 questions is, if you're someone who's self-employed, how would you recommend that we prepare for taxes and retirement?
Okay. The first one is a little bit easier. There's sort of 2 approaches that we take with clients, and it depends on what's easier for you and how active you are in keeping track of your income and expenses during the year. Okay, so for most folks that are self-employed, your net profit from what you do, revenue minus all your expenses, whatever's left at the end of the day, that amount you're going to pay federal tax on, state income tax in most states, and then also self-employment tax, which is Social Security and Medicare, right? And not everybody is always expecting that last bit to come in, but if you've ever been self-employed, you know what I'm talking about. You get hit with another 15%, which is the employer and employee part of Social Security and Medicare, right? So you've got all those pieces, and usually for most folks, what we'll say is, if you are active about keeping track of your income and your expenses during the year, and you know what that is, what number, what percentage should you be kind of targeting? I would say target at least 30% of your net profit, right? 30% of that, I want that set aside in some savings, knowing that either that's going to fuel the estimated payments that I make if you need to do so, or I'm going to have that money there to pay my tax bill at the end of the year. Okay. If you can't be bothered to keep up with your income and expenses during the year, you want a simpler approach. Then I would say if you want to take it off of the incoming revenues, just your inflows, just what's coming at you in your self-employed work, then you can use a smaller number, a smaller percentage, I should say. And then we usually tell people aim for about 20%
So
of all,
20% of every check that comes in.
20% of the incoming checks, put that aside. Or the more accurate one would be 30% of your bottom line. So 20% of the top line revenue or 30% of your net profit, right? But it depends on how closely everybody's keeping track of things. Some folks, it's just easier to do it based on what they take coming in.
Yeah, that was a lot of math flying at my face just now. And I went to law school to avoid math. So, okay. So, and then what about retirement? So we did the tax portion. And then do you have a equation for retirement?
Most folks, I'll just be totally candid with you. In my experience, thousands of people we've been working with over 15 plus years, most folks who are self-employed and not at the point yet where they have a business entity, like a corporation, an S Corp, C Corp, something like that, that they're running things through, the game number one, objective number one is building up savings and like having just your own personal safety net. Because in particular, I guess with our clients who are in creative industries, you never know, right? Like we had a lot of clients in industries last year that were really heavily hit. We had others who weren't as much, but even if you were an actor or performer or something like that, who you may be collecting $300,000 check one day, you may not get another check for 10 months, 11 months, right? You don't know. There are ebbs and flows. So we've been focused mainly on that. And I think it'd be great for you to bring on a financial planner type person to speak to some of the other stuff that's come up in this conversation. This would be another one, like when and how much is the right time to set money aside for retirement. But if you have that personal safety net going where you can cover your bills for a little while, even if the income dries up, the easiest thing to start with is just a regular IRA. So those are individual retirement accounts, right? And they come in two flavors. You can get it in traditional or Roth, right? So traditional IRAs are the ones where I'm going to get a deduction for whatever I put in there today, meaning I'm not paying taxes on that money today. I'm deferring that. And a traditional plan, it makes sense then, you pay for when you take it out. So later when you retire, as you get those distributions out of that account, you pay taxes on that money then. The other variety is a Roth IRA. And just like there are traditional and Roth IRAs, individual accounts, you can also get traditional or Roth 401ks, that kind of retirement, right? So there's just two different concepts. And in a Roth plan, you are putting in after-tax dollars. You're not taking a current year deduction for that. You're putting in after-tax money that is going to go into the account. And here's what you get for paying the price of paying taxes today. It's going to grow, and all of the growth and appreciation in value is tax-free. And then when you get out later, when you take it out all the way at the end of the line, retirement time, you are not going to pay taxes on that income that gets distributed to you. So when does it make sense to do which one, right? Like a lot of people would say, if you're in a fairly low bracket right now, just pay the tax on the money now, right? It's cheaper for you to pay it today. Put it in that Roth and let it grow, because as you continue through your career, as you continue to accumulate wealth, you'll be in a higher bracket down the road, and you're going to wind up paying more later if you defer it. So a lot of folks will say that. And you can also do a mix. You could do a little of both. I know some financial advisors that would say, like, maybe hedge your bets a little bit and put some in Roth, some traditional? It's a great question to ask your advisor. But so Roth plans or traditional IRAs, both of those are options for you. And if you are self-employed, there are other high, if you're a self-employed person but a high income earner, there are options available to you that give way more allowable current year contribution than just an individual plan will let you, right? So just because you are self-employed, you now have access to plans like a SEP IRA, SEP, a simple plan, even an individual 401k, right? So you can be contributing tens of thousands of dollars to that account if you have it to put in there. Whereas with an individual account, you might be capped at like 6. So is a great opportunity for folks who are self-employed and want to stash some money. But that's a good thing to think through and talk through with your financial planner if you can find one.
Yeah. You do a really great job of simplifying at least what in my mind are very complicated topics. And just hearing you explain, I'm like, actually, I might want to be an accountant. This actually sounds fun. I could do this. But I'm gonna leave that to the professionals. But you mentioned one thing that I want to touch on really quickly. You said that if you are a business owner who doesn't have an entity, right? Like if you are not,
Yeah.
or like a corporation, that was one of my questions that I initially skipped over. But people wanted to know, how do you know when you are ready to be, like, there's all this conversation. People talk about like LLC Twitter, right? Like everybody says you need to have an LLC, you need to have an LLC. And like, yeah, you do. But at some point there also comes a point where just having an LLC is not it's not as beneficial as being one of these other entities might be. So at what stage should you say I need to be an LLC, and at what stage should you say I need to be an LLC and?
Yeah, is a great question, and I'll cop to something that I used to hate on lawyers who made recommendations to entrepreneurs to just like open an LLC, because I was like, that answer is incomplete, because
Right.
like an LLC, but what, right? Because what's important to know about it is the LLC. One of the reasons that people like giving it as a recommendation is it's not necessarily wrong. Like it can be the right structure in a lot of different situations, but you have to know how you elect for this thing to be treated, because it's like a container that can shape shift into all different types of structures, right? So an LLC can be used for, if it's a one person operation, it can be disregarded and you still file on Schedule C of your personal return. It can be a partnership. It can be taxed as a partnership. It can be a C corporation or an S corporation. Not be those things, but it can be taxed that way. So the LLC can literally morph into any of the different business structures you want when it comes to tax treatment. So
I think at this point it's also important for people to know that like an S corp and a C corp is an LLC, right? It's just an LLC that you, like you said, it's being treated and taxed differently. So I mean, this was something that we talked about when we were setting mine up, which is, oh, I don't need an LLC, then we'll just skip that and go to something else. And it's like, no, you still need an LLC, but you have to tell the IRS how you want that LLC to be treated, right?
yeah,
Um,
that's right. It's an important distinction. It gets pretty, this is like into the weeds a little bit about it, but yeah, an LLC that chooses to be taxed as a C corp is not exactly the same as a C corp, especially when it comes to like state law. So C corps are their own thing, and just for folks who are trying to clock the differences, a C corporation are generally speaking your larger corporations, right? This is like Boeing, Motorola. These are all C corporations. S corporations are a a different variety of corporation that starts out the same way, but they make an election to be treated as an S corporation. The S comes from subchapter S of the tax code. And those businesses, instead of paying their own taxes like a C Corp does, it pays its own tax bill. In an S Corp, the model works like this. Whatever taxable profit the business had, instead of it paying corporate tax rates, all of that gets distributed out to the owners by their percentages, and the owners pick up the bill on their personal tax return, paying personal tax rates. Okay, so that's the difference there. S corps tend to be for smaller corporations that have 100 or fewer owners. And right, so you've got S corps, you've got C corps, and then you have LLCs who can kind of be taxed as however they want to be. So it's definitely the most flexible. When you're talking about which entity makes the most sense at which stage, if we put apart to the side for a moment businesses that have more than one owner, because you can't have a sole proprietorship with more than one owner, and so you'd probably become a partnership more quickly. If you just think about a one-person business, some general guidelines are a C corp. We would start looking at for people that are doing probably 400, 500K a year or more. S corp we would look at for people who are revenue-wise doing somewhere between 150 or so to about 400, let's say. Really, the S corp thing is about profit. So if you think about the bottom line profit, we're looking at profits of anywhere from 60K to 300 or so. And then, so short of that, if you are at revenue ranges under 100 or bottom line profit after expenses of less than 60, should you become an S corp? No, you should not. It will not save you any money, because any tax savings you would realize from using an S corp as a strategy, you're going to pay more than that for just all of the administrative burden that it takes to be an S corp. You have to file a whole separate corporate tax return. You have to be on payroll of your own corporation. Right? All that stuff costs dollars for people like me and for software companies and everything to do that stuff for you. So it only makes sense as a strategy once you're kind of over the 60, 70K a year in profit. Less than that, doesn't make sense to set up an LLC for a business that is doing 100K or less than 60K in profit. It totally can. We usually think about a few different factors that would make it attractive. There's not going to be tax savings because the single member LLC gets taxed exactly the same as you would if you were a sole proprietor, right? It's just on Schedule C. So there's no tax impact, but maybe you want to create that LLC because you have a brand that you want to start building, and that brand has a name that's not your own name. So I create this LLC because now I want to register that name with the state, so that at least within the walls of my little state, for now, you can't get protection nationally until you talk about trademarks, but at least within your state, nobody else can create an LLC with that name once you've registered it. And you can now go out and sign contracts in the name of your brand. You can open a bank account and collect checks in the name of your brand, right? So you don't have to have like that great company name you came up with, but then when somebody's trying to pay you, you're like, oh, actually, by the way, could you make that check out too? Because like you don't have the account set. So branding is one big reason, and another is liability, right? So depending on the industry you're in, some can be a little more litigious than others. Like how much risk is there really? But if it's something that's helpful to you, setting up that LLC might only cost you maybe $500 or so the first year, maybe about $150 in renewal fees. So is $150 a year a pretty cheap insurance policy against liability? It might be.
Right.
So that's one of the main reasons people look at setting those up.
Okay. This was very helpful because, like you said, like the lawyer in me, I see a lot of these conversations taking place on social media, and I'm like, again, it's not wrong information. You telling someone to set up an LLC isn't putting them at risk of anything, but you aren't giving them all of the information, and therefore you aren't giving them any of the benefits either, right? It's like it's just information. It's like set up an LLC, okay, and then what, right? It's like having a passport. Okay, I have a passport, but I don't know how to use that passport to my benefit because I don't know how to book a flight, or I don't have the money to book a flight. No one's telling me what to do once I get the passport. No one tells me what to do once I get the LLC. So I see these conversations happening on social media, and I'm like, you're only giving them half the information here, people. So I appreciate you kind of pulling the curtain back on that a little bit and explaining exactly why it isn't the end all be all, and having one doesn't make you any more, I guess, successful of a business than not having one, at least like you said, under that 150 mark or whatever. It's like, it doesn't mean that your business isn't legit or that it can't be profitable or that it's not accurately set up.
That's right.
It just is what it is, right?
That's right. Yeah. I mean, yeah, it should not be a measure of like vanity or success or anything. Anybody can go do that, with $100 and a piece of paper, bam, you have a corporation, right? But is that the right thing for you? You probably have to look into the details a little more. And again, this is like a recurring theme that I think it's important to just keep emphasizing. This is yet again another case where just because you hear somebody else that set up their business this way, that does not mean that's the best thing for you, right? Because you may have a different ownership structure. You may have different cash flow or profit levels. There are so many factors that go into the decision. You can't just assume that somebody else who did it that way, that's exactly the right approach for you. So it's worth checking into and asking.
Got it. Well, we're a lot over our time, so I won't hold you anymore. We could ask more questions forever. We are going to save this, but I feel like sort of what we got from this is that you work with creatives, and that is like what you specialize in because you are a creative yourself. You gave us the golden rule of, if you had to spend this money to make money, there might be an argument for writing that thing off on your taxes.
That's right.
That is the best thing I've learned all week, and I'm very excited about it. LLCs are good, but not always necessary or the end all be all. And and then tax write-offs, we went over that one already. But the last thing I want you to do is tell everyone who may not be at a place to hire a CPA just yet, what are some resources that you would recommend, like book, software, any of that? Like, what do you recommend? And then for the people who are in a place where they might be ready to hire someone, how can they contact and reach you?
Okay. Yeah. All right. So, wow, resources to recommend. There's so many good ones. I think there's a book that I recommend often to our clients, especially, again, creatives and people who are in sort of service-based businesses. There's a book called Built to Sell that I tell people about a lot. It kind of teaches you how to think about building a business that someday you maybe could sell, whether or not you're trying to today, but like just to put that process and building the structure around yourself to be successful. That book, I think, is a great one. There are a lot of the times at universities, I've met with these people. I've been this person before, but like universities and different community organizations often have business development centers that have people you can meet with and they're staffed with people like me. Like you might sit down with somebody like me and get access to somebody who could help you work on a business plan, could look through your numbers with you and see, where your costs are and what's in line, what's not. So there are a lot of resources out there like that. And then, do make sure you're also listening for the different programs that are coming out right now, in particular. PPP programs, SBA loans, all these various things. I hear a lot, especially from folks who, A, don't trust the government, maybe for good reasons, or B, who are just creative folks who have a hard time kind of sifting through this stuff. A lot of folks feel like these things don't apply to them, and sometimes they do. Like sometimes you do have access to those programs, those resources. So keep an eye out and ear out for that kind of stuff. And the last thing I'll kind of point to is we just put out some content on a platform. So one of our clients, Arlen Hamilton, who is a founder at Backstage Capital, Arlen's company it's a VC firm. They raise money for what she calls underestimated entrepreneurs. So particularly women founders, people of color, folks in the queer community, and at every intersection thereof. So those are the founders that she tries to funnel investment money into. And if you search Arlen's Academy, ARLAN, Arlen's Academy, she has a bunch of courses and content put up there. And so there's 2 courses that I was asked to produce for that. One is a free course that walks through all of the government programs. Some of them I just mentioned, like the PPP program, the EIDL loans, all that kind of stuff. So a free course that has that access, you can check that out there. And then there's also a paid course that's like a micro version. It's like a lot of the stuff we talked about here, but in a little more depth and kind of comprehensive thinking about where like different aspects about your business, from trademarks to legal structures to whatever. And I was just pinged by our marketing person that the link is in my bio, so I should mention that. Okay, so check out the bio. The link is up in there. And then for folks who are interested, right, if you're looking for help, either just like right now is tax time and you could use some help tax wise, or you have a business and you could use some ongoing support. There's 2 different things you could do. You could jump on our website and click the button that says work with us. There's a little tool there that's going to ask some information about your business, and it's going to help point you in the right direction of how best to work with us based on where you're at. So whether it's taxes or full on, monthly service, it'll take you to the right spot there. And if you want to reach out to someone personally and have more of a conversation or get some help and guidance in that, instead of doing the tool yourself, you could send an email to hello@revelcpa.com, or shoot us a DM off of the Instagram here on the top. I don't know if you can click on my name. Probably you can. Send us a message there, and we'll get back to you and get you connected with the right people too. But now's the time. 'Tis the season. We're getting busy, but we'd love to hear from anybody that's interested.
Great. Well, thank you. A lot of this, like I said, you explain things very well. I wasn't sure how much of this was going to be digestible, at least for me. I was like, maybe they'll get it. I won't. I'll leave it to him to figure out for me later. But it actually, you made a lot of sense. You explained things very clearly and simply. So I really appreciate that. And I appreciate you taking time because I know this is your busy season. And we went over our allotted time. But yes, thank you so much. I'm going to, again, save this for everyone so you guys can go back and watch it. And yeah, that's it.
I love it. Thank you for putting it together again. And we will see you soon.
Thank you. All right. Bye.
Bye.